As the world grapples with economic uncertainties, a new forecast by Peter Berezin, chief global strategist at BC Research, predicts a grim scenario for the U.S. economy and stock market. Berezin anticipates a severe recession that could trigger a 30% drop in the S&P 500, setting a new low even below J.P. Morgan's bearish projection. The downturn, expected to begin later this year or early next, is likely to inflict widespread economic pain, impacting global growth and destabilizing markets worldwide. The foreboding outlook stems from a predicted acceleration in labor market slowdowns, dwindling consumer spending, and tightened lending standards. Berezin warns that businesses may also cut back on capital expenditures, exacerbating the economic decline. With both fiscal and monetary interventions appearing insufficient to stave off the downturn, the question arises, are we prepared for the profound economic challenges that may lie ahead? Analyzing the looming economic downturn, are we ready? The financial world has been stirred by Peter Berezin's recent prediction of an imminent and painful recession that could slash the S&P 500 by 30%. Berezin, the chief global strategist at BC Research, has revised his target for the S&P 500 to 3,750, a significant drop from J.P. This stark revision is based on expectations that the U.S. economy will soon experience a sudden and severe recession, potentially beginning later this year or in early 2025. The indicators of an impending recession. Berezin's alarming forecast is grounded in a range of economic indicators, suggesting a rapid deceleration in the labor market, which could place enormous pressure on consumer spending, a primary driver of the economy. The pandemic-era hiring boom has tapered off, with official job openings data showing a substantial decline in available positions and a drop in the quit rate. Private surveys of job openings reveal an even steeper fall, highlighting a broader cooling in labor demand. Additionally, data from the Labor Department indicates a slowdown in wage growth, further straining consumers' purchasing power. Recent economic reports, including the May Personal Consumption Expenditures Price Index, point to a deceleration in consumer spending, reinforcing concerns about a weakening economy. The vicious cycle of economic decline. Berezin believes that these signs could mark the beginning of a vicious cycle driven by a weakened labor market. Lower-income Americans, who have already depleted their pandemic-era savings, are increasingly struggling to manage rising delinquency rates for credit cards and auto loans. This financial strain may compel banks to tighten lending standards, further constricting consumer spending. As consumers cut back on spending, businesses might reduce their investment in capital projects, known as capital expenditures, CapEx. Data from BC Research already shows that many companies are preparing to scale back CapEx, despite the promising trends in artificial intelligence, the CHIPS Act, and reshoring initiatives that Wall Street had hoped would boost spending. The limited role of monetary and fiscal policy. In Berezin's projected recession scenario, the Federal Reserve is unlikely to intervene immediately. Fears of sparking a second wave of inflation could deter Fed Chair Jerome Powell and his colleagues from acting swiftly. Berezin suggests that any potential rate cuts or monetary easing would occur too late to prevent significant economic damage. Fiscal policy might also offer little relief. The U.S. budget deficit is projected to expand to 7% of GDP in 2024, according to the Congressional Budget Office. Given the urgent need for fiscal discipline, any attempts to increase deficit spending could face resistance from the bond market, regardless of the outcome of the November elections. Strategic adjustments for investors. In light of this bleak economic outlook, Berezin recommends that investors adjust their portfolios by reducing equity holdings and increasing allocations to bonds and cash. For those willing to engage in more tactical trades, he suggests shorting Bitcoin and betting on a decline in U.S. bond yields, which could subsequently weaken the U.S. dollar against the Japanese yen. Berezin predicts that the yield on the 10-year Treasury note could fall to 3%, while the Fed funds target rate might be cut to 2% if his recession scenario unfolds. Contrasting perspectives. J.P. Morgan's outlook. While Berezin's forecast is among the most pessimistic, J.P. Kolanovic has reaffirmed J.P. According to J.P. Morgan's mid-year outlook, U.S. economic growth is expected to moderate in the latter half of 2024. J.P. Morgan's bearish case hinges on the belief that the mega-cap stocks driving the market rally over the past year will face increasing challenges to meet investors' high expectations for earnings and forecasts. Kolanovic argues that valuations for these stocks appear stretched, suggesting that the current market rally, fueled by artificial intelligence advancements, might reverse, leading to a significant pullback in the S&P 500. The current market scenario. As of the latest reports, U.S. stocks have been struggling, with the S&P 500 and Nasdaq Composite both experiencing slight declines as they attempt to close the first half of 2024 at record highs. The Dow Jones Industrial Average also faced a drop, reflecting broader market apprehensions. Looking ahead, preparing for economic challenges. Berezin's forecast raises crucial questions about the readiness of the economy, policymakers, and investors to navigate a potentially severe downturn. The anticipated recession could have far-reaching implications, not only for the U.S., but also for global economic growth, which Berezin predicts will weaken as Europe and China face their own economic struggles. In this uncertain economic landscape, it is imperative to consider strategic adjustments and prepare for the challenges ahead. As we reflect on these predictions and their potential impact, the pressing question remains: are we adequately prepared to face the profound economic challenges that may be looming on the horizon? What do you think about the economic forecasts? How do you think these potential challenges could impact your personal and professional life? Share your thoughts and perspectives.